Nigeria's Minister of State for Petroleum Resources has said, that's Chief Timipre Sylva, with respect to the Petroleum Industry Act, that the NNPC, the state oil company, will no longer handle the sale of crude oil that goes into the Federation account. The minister noted that the function will henceforth be performed by the Upstream Regulatory Commission, which will sell the commodity and retire the funds to the Federation account, from which the federal, state, and local governments share monies monthly. He stated that because the NNPC Limited will be a company that will be operating commercially, it will no longer be dependent on the government, while the corporation would stop helping the custodian of the crude oil as it currently obtains. Well, joining us to discuss further is Omotola Abimbola, an investment analyst with Chapel Hill Denham. Omotola, good morning to you. Thank you so much for joining us. I guess we can start with Timipre Sylva. What do you make of that, what he said with respect to the commission selling crude? What do you make of that?
Well, I think it's, on the surface of it, it looks very hard that you have a regulator in terms of the oil and gas industry being responsible for selling crude oil on behalf of the Federation. It does appear as if it violates the spirit of the PIB, but I wouldn't.
PIA, sorry.
PIA rather.
Yeah, correct scenario is PIA.
It's enhanced already.
Yeah.
But I think it's also important to know that there's probably a good reason for this, because don't forget, right now, because of the PIA, we're not going to have the NNPC being unbundled into a regulator that will be in charge of affecting the upstream oil and gas industry, and then a separate company, no longer a corporation, a limited liability company that will be in charge of oil and gas exploration and production activities. Now, normally you probably would have expected that the NNPC, that is in charge of the commercial aspect of, the government's, part of the oil and gas industry, will be in charge of selling crude for the Federation. But I think that if you look at the historical antecedents, we have had, a series of events in the past, where you have the Federation's crude oil sales proceed being commingled with the NNPC's fund, leading to under remittance, of revenue to the Federation account. And we have had several FAC allocation meetings in the past where we're going to have a standoff, essentially, between the NNPC and commissioners of finance, essentially saying that, look, we are under reporting the crude oil sales, that belongs to us. So I think perhaps the reason why we have this provision in the PIA now, saying that, okay, going forward, the NNPC will no longer be responsible for selling the crude oil, the crude oil sale, crude oil on behalf of the Federation, and should not go to a regulator, is to prevent, a further occurrence of this. And I think, if you think about it, that's very, very logical. Probably, we'll probably see how, because right now, although the law has been passed and it has been signed into law, we're going to have an implementation process, I think, over the next 12 months. So perhaps by the time we go into the nitty-gritty of the implementation, we know for sure, how the federal government will ensure that, we have enough procedures to ensure that, the revenue being generated from these crude oil sales actually go to the right channels.
Fantastic. I want to get your thoughts on the FIRS and this, I have to say, very ambitious revenue target of 10 trillion naira 2022. What do you make of that?
It is a very, very ambitious target, because if you also look at the historical antecedents, the highest revenue that has been generated by the FIRS, in a single calendar year before, the highest has been 5.3 trillion naira in a single calendar year. In 2020, the service generated about 5 trillion in tax revenue, which is quite resilient, considering the fact that, we had the COVID-19 pandemic that affected, business activities and also affected household expenditure. But now trying to move from 5 trillion in 2019 to 10 trillion, that's 2 times. In 2022, I think that looks like a tall order. But I do believe that there is a scope for improvements in revenue generation. This year already we're beginning to see some improvements, thanks to the fact that we have had restrictions being lifted in the economy, and we're now seeing activities, slightly going back to normal. We've seen that, if you look at the key tax revenue line items, they're all performing very well this year. The value-added tax, they're up by about 50% year on year. The corporate income tax, they are up by about 22% year on year. So definitely, due to the fact, due to base effects alone, and the fact that we're not seeing economic activity return back to normal, there is a scope for an improvement, in tax revenue. But whether we're going to achieve 10 trillion just within a year from 5 trillion in 2020, I think that is very, very doubtful, But if we do want to achieve that, there are a number of things that have to be done, particularly regarding the processes to generate the revenue itself. Trying to ensure that we have greater compliance with the tax laws for both businesses and even for households. If you look at Nigeria's tax to GDP ratio, for instance, we're just about 6% tax to GDP ratio, which is very, very low compared to, it's the lowest in the world, in fact. Right. So that shows that even within the current tax laws, there's still a bit of scope for the FIRS to improve on its revenue generation. And then perhaps we could get a bonus. Maybe next year the federal government could look into actually increasing the value-added tax rate again. I think in terms of the actual rate itself, maybe there is a scope for Nigeria to be a bit more competitive. So currently, our VAT rate of 7.5% is amongst the lowest in the world. So maybe there could be a plan in the future for there to be, an increase in the VAT rates, perhaps to 10% or thereabouts. But I do believe that, that 10 trillion is a tall order if you compare it to where we are coming from. But of course, we can do better from where we are now.
Great stuff. I want to go global now. We talked about Jerome Powell and the Fed's minutes possible taper. If that was to happen, how do you see the impact of tapering from the Fed in the United States on developing economies?
Well, historically, anytime you see the U.S. Fed tightening monetary policy, either via reducing the asset purchase program called tapering of asset purchases, or either via increasing its benchmark interest rate, which is the Fed fund rate. Anytime you see that happening, typically what you see is that we usually see we usually see a risk of sentiment in the global economy and in the global financial market, essentially. Where essentially you see, capital flow reversals from emerging and developing countries, due to the Fed's, tightening stance. The last time we had, the U.S. Fed tightening, I think that was in 2018. The last time they raised interest was in 2018. And during that period, if we just cast our mind back to the events that happened that year, we saw, a major sell-off in emerging market assets. We even saw a bit of, major tail risk that happened in a number of countries in emerging markets like Turkey during that period. So if you are very vulnerable and you are very, very dependent, on foreign private capital flows into your financial markets, then you are going to be highly susceptible, to a Fed, tightening of interest rates. So if, for instance, you have foreign portfolio investors, making up more than 20% of your capital markets, for instance, if there is a Fed tightening, it is going to affect you. But in this case, I do think that the impact may be more limited, particularly for emerging and developing countries, for a number of reasons. The first one is that the Fed probably wouldn't be accelerating the purchase, probably wouldn't be tightening very aggressively for now, because the global economy is still recovering from the COVID-19 pandemic. And then we also have, a very big, gift that has been handed down to emerging countries by the IMF, which is the SDR allocation. So that will go, at least a long way to cushion the impact of that blow coming from the U.S. Fed.
Great stuff. Murtala Abimbola, investment analyst with Chapel Hill Denham. Thank you so much for joining us, taking us through those headlines.
Thank you.